Hello and welcome to this Thursday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Mike Baudendistel give us a Rail Intermodal update. But first we're going to go to Strickland with Carrier Update, brought to you by PowerFleet. Stay tuned.
Hello and welcome to your carrier update on this Thursday. So we continue to see volumes increase significantly here over the last little bit. Now, this acceleration a little bit on the unknown side of things. We did not think that we would see this level of acceleration looking at historical trends, unless you're Mike Vincent maybe on freight forecasting. But the last couple of years, we're looking at the green line showing 2018, again, this really robust year that everybody has decided was one of the best freight years on record. And then 2019, again, one of the softest years that everybody has considered over the last several years. So 2019, we did see a big jump in volumes at this point in time. So maybe it wasn't completely unknown or out of nowhere. 2018, things moderated a little bit, but then they continued to climb all the way up to almost 11,000. To peak out towards the end of the month of June. So again, this is a bit of an unprecedented, uncharted waters in terms of where we're going with the freight market in June. A lot of warehouse redistribution, a lot of inventory moving from warehouse to warehouse, not necessarily a bunch of endpoint retail freight moving just yet, but again, a lot of replenishment moving across the country still. We're still seeing a good bit of short haul volumes as well. So what is it doing to capacity? Still not having a big impact on capacity just yet. Tender rejection rates still hovering around that purple line down there, which is 2019's tender rejection rate, which at this point last year was 5.02%, very low. We're sitting around 5.79 right now. Not high. Here's 2018, 24.21% tender rejection rates. Of course, anybody operating in the market in 2018 knows that spot rates were extremely active at that period of time. There's a lot of differences between 2018 and 2020, however. So the market is a completely different place. 2019, very oversupplied, a lot of capacity available in the market at this point in time. So the interesting part is that we're simply not seeing the demand have as big of an impact as it did way back in March, where if you look at our blue line right here, tender rejection rates soared as demand surged. This seems to not have been, it's not hitting that inflection point that we were anticipating it to hit, being about 11,400 right now, which traditionally shows 11, 12, 13% tender rejection rate. So not crushing the carriers just yet. They're staying within their boundaries as a carrier. So, where in the country are we seeing some sort of, significant volume increases? And let's see what it's doing to capacity overall. Here's our volatility, market volatility chart here, showing anything in green is going to be the biggest, most significant increases in volumes, rejects, head haul, tender lead times, etc. It's organized by market share, however. I've got it filtered by the market share value. So the biggest markets in the country in terms of outbound volume on the top, and it's, comes down in descending order here. So Ontario, California has taken over the top slot in terms of the biggest market in the United States. An interesting little tidbit there. Atlanta had been the strongest market to date, this year, and had not been knocked out of its top slot. So Ontario continues to drive a lot of freight market volume moving throughout the country. However, it is not one of the more volatile markets right now. Week over week changes. We go down the outbound volume line here. Column, strong increase in Detroit, Michigan. Detroit, Michigan, of course, over there in the green in our map, one of the strongest, most volatile increases in volumes week over week. Let's break down the Detroit market real quick. Of course, the Motor City, known for its automotive production and all of that. So looking at the outbound tender volumes, every single length of haul is on the rise out of Detroit. So a lot of volume moving out of Detroit right now. We look at this chart and you can see that volumes in the green line there, the volumes are cranked up right now, and you also see the orange line, tender lead times increasing significantly from under 3 days to 3.63 days, tender rejection rates going down as a result. So increasing lead times make carriers have a little bit more time to get that available capacity ready to go, and so they are gobbling up all those volumes right now. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to the Rail Intermodal Update. I'm here with Mike Baudendistel. Mike, what do you have for us today?
So today, talking about some rail carload data. Yesterday the AAR put out their weekly report for week 23. We've talked about in the past the rail carload business because of the sensitivity to the industrial economy, that being down more so than intermodal volumes, which is more consumer driven. Seeing that again this week, the rail carload business down about 20%, but the intermodal units down just under 10%. So down 9.8% for North America, down 9.6% for just the U.S. rails. So sort of psychologically feel better that it's something that's a single-digit decline. You sort of see in blue is 2020, and that spread between where we were the last 3 years, beginning to narrow. So I think seem to be improving, at least on the volume side for intermodal. When we go to our O-Rail data, we can break that down between domestic and intermodal. Those are two distinct markets, and you really see that intermodal is really sort of a tale of two markets here. Where in blue we see domestic intermodal, and that's been the part that's been rising. It's all the way back to where we were sort of in early February. Meanwhile, international intermodal continues to sort of trail off. Haven't seen a lot of improvement there. Have seen some pickup at port activity. It has been a little bit lumpy. Saw that big spike at the beginning of May, but then some of the ports are sort of improving a little bit more than others. Still some blank sailing. Some of those should tail off later on. But really seeing sort of this the domestic market, which is much more related to a lot of our listeners that follow the domestic truckload market. So those two things are competitive. Going to this next slide compares domestic intermodal in blue with in green the long haul outbound tender volume index. So long haul volumes have tended to not be as strong as overall volumes for truckload. This just looks at ones with lengths of haul greater than 800 miles. So that's going to be what's competitive with intermodal. You think 500 is and above is maybe starting to get competitive. And here you see the long haul trucking up 15% the last 3 months versus about up 3%, almost back to where we were with domestic intermodal. So really truckload taking a little bit of share. I think some of that is due to just some of the time sensitive nature of some freight. With intermodal you are giving up some service. Usually it's truckload plus a day in terms of the service level.
And as you mentioned, tale of really two distinct industries, even though it's all in intermodal. We're looking at domestic, as you said. Really, it's performing a lot better than international. Are there any catalysts that you can see in the coming future that might add some upward pressure for international?
Yeah, I think that some of the blank sailings are going to start to decline in terms of just the percentage that has been blanked. I mean, we're seeing that there's May and June there's a higher percentage of blank sailings than we're going to see in July and later on in the fall. So it'll be interesting to see where that peak shipping season is if it gets pulled forward. But I think just overall more port activity could drive that, or just not as much availability of domestic containers, so then you wouldn't have all that transloading into the larger 53-foot containers.
And real quick, last question, do you think these domestic levels, now that we're kind of back to where we were before, is this something that you see as being sustainable?
I think it is. I think it's. I think a lot of it depends on the consumer, demand. But initially, if things continue to open up, I think a lot of that is going to be sustainable. If we do have, a big surge though in coronavirus cases in the western states, like we're starting to see, then you could see maybe consumers be a little bit more cautious.
Excellent, Mike. Thank you so much. Insightful as always. We appreciate it. And thank you so much for tuning in. That's going to do it for this edition of FreightWaves Now. We are always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.